see. Okay, we got one watcher. Trying to see one watcher. Let's see if that is. No, I don't know who that is. Or whoever's watching. Okay. I think I'm just gonna start right into it, even if there's not that many people joining right now. I usually wait for a couple people to jump in, but it's pretty late, so I'm going to probably go ahead and start. We had 100 subscribers today. That's like amazing. We're at 100 flat. So yeah, I'm just gonna continue and jump right into it because I don't want to leave that the one person watching right now to waiting and stuff like that. All right, so let's see. Okay, so I'm gonna start off with. Okay, my phone's ringing. Okay, I have no idea. All right, I'm gonna start off with SPY did not break its price target. This alert right here went off actually today, and I got confirmation that it was falling. But if it were to break that, which was what I was hoping for, if it were to, and keep in mind this is why it's better to watch than just to jump into a position. But I was watching it and waiting for an alert to go off, and the alert went off at or below, so it actually broke. In yesterday's video, you can watch if you haven't already watched. It broke below the 280, 230 area, and that made it aggressively push all the way down, which you could have shorted it, because that was breaking the low, meaning it was pushing to break another low, or either retest it. I was hoping that it would break that 284.11 area, and then that would make it, retest these highs. That doesn't mean that the market is going to fall overall. It still hasn't broke lows. Not only that, this has happened before. A lot of times, during a consolidation period, if this is a consolidating period, which most certainly, I mean, as of right now, we are consolidating. If it starts breaking like multiple lows, I'm curious on what it's going to do with these all-time lows here on the 4 hour. So I'm curious on if it's going to break these or if it's going to kind of stabilize around it and then start pushing back up. And if it makes 100% recovery, and this is what I'm going to be watching out for, if it pushes all the way back up to here, I'm going to actually set this to a dashed line. And we're going to put it to yellow. Okay, so if it pushes all the way back up to the yellow area, then that would be our confirmation that, okay, it's in a consolidating area, and we're going to be looking for a position very soon, or very shortly. And then I would let it pull back and probably take a position around that price. I'm saying if it did consolidate and start turning around and breaking highs, and then it pushed up and hit this, that would be a 100% recovery from its fall. And then I would wait for it to pull back and then most likely grab some calls right there and let it do that 100% volume engulfing candle, which, it doesn't have to do that. It can still go up without doing that. I'm just saying that's what most of the time that's what it does. Um, it would push up and start breaking highs, and I would sell at its next previous high, which would be the 287.60 area. So that would be my margin there. I'd let it come down, buy here, and then let it go up, and then sell at 287. So entry 281.50, and then exit 287.48. Hey Shirley. Yeah. So that's if. That's if. Like I'm basically what you need to do in the stock market is you got to plan things out. You have to have your entry, your exit, and your stop loss already planned, and it goes further than that. This is why if the stock market was easy, everybody would be doing it, right? So this is why like it seems to get overwhelming for a lot of people, but it's not that overwhelming if you really think about it. So like you got to have your plan for if the market were to go up, then have that entry, exit, and stop loss. If the market were to break lows and go down, have that entry, exit, and stop loss. That way, either way it goes, you don't have to miss out on anything. You can still jump in and trade. Um, that's basically what your homework is every single night. Every single night, your homework is to plan that out, and then to, the next day watch it and set your alerts. Whatever alert goes off, then that looks like that'll be your trade for the day, if it's down or up. Uh, Now, basically, what I want to see is for it to go up. I think it has more of a chance to go up. And the only reason I think that is because it is, in this kind of curling pattern. A lot of people freaked out when this happened because that is a larger fall than it's previously taken. Um, Now, if you really think about it, it wasn't as large as this one. It wasn't, very, very, very aggressive. There were still some buyers pushing it back up, and when it fell here and hit that bottom and it pushed all the way up, it made a 100% recovery from its previous peak. Technically speaking, what that is telling us is since since it sorry, hang on. Since it fell here and then pushed up for a retest and it fell 100% and then pushed all the way back up 100%, traders are willing to trade at 288.82. So that's just conservative around 288.50. Traders are willing to trade around that price. So now we have our top area of where most traders are willing to trade. Now we're examining where most traders are willing to sell and buy, so we can get a trading area. So once we find that that consolidating point, then we will have our support and our resistance, and we can start trading upon it. Keep in mind, I'm on the 4-hour, 180 days, so we're on a half hour or a half year chart. 180 days in the total chart, and then 4 hours per candle. So each candle represents 4 hours. There's 8 hours in a trading day, so there's 2 candles during one day, and then overnight, of course, there's 4, and then another 2 candles. But one thing I really, really, really want to watch out for is I want to see where this is going to stop. Now, I have no control over the market, and I can't predict the market, so I'm not going to, say it's going up, and I'm not going to say it's going down. More or less, in my opinion, I'm just going to watch it and see what happens, down or up. I mean, I'm going to play some trades. Other than that, though, I'm going to really, hope for the best for the market, of course, but don't let that get in my way. Like, you cannot let that distract you. A lot of times you'll place trades on something that or it was all based on hope, and you really don't want to do that. So, one thing I would keep in mind and keep focused on is really make sure that you're really doing your due diligence. Basically, you're doing your studies right and correctly. Don't let your hope become a distraction to where you're like you're so stuck on it falling. Because like I did this before. A lot of people, a lot of traders make this mistake to where they're very stuck on the market falling or going up. But in this case, most people are so stuck on the market crashing right now. You see it all over YouTube. Um, in reality, I don't think we're nowhere near a crash right now. So I don't know why people are flipping out over this stuff. Probably because it brings attention to their channel. But don't get so in the mindset of it crashing that you don't want to do any calls and you miss out on opportunities, and that you also don't want to you also keep putting in like puts. Basically, you keep shorting the market because you think it's going to crash, and then it starts going back up. A lot of people did that here. They, oh, it's crashing, and then pushed up. Oh, it's crashing, and then pushed up. And everyone's losing money as they think it's going to crash, and it keeps pushing up. Um, don't fight the trend. The trend is your friend. So I know that's common sense, but I'm just saying. It happens a lot, and it's not anyone's fault. It's the natural way we think. They built the stock market around this way we think. So, see, so we do have a support here. Yes, technically speaking, that broke the support, and it's trading below the support. As you can see, this candle touched the support, and it's trying to resist. Depending if it breaks below that 279.42 area, then yeah, we could get a break below for lower lows. But one thing I'm really want to focus on is this candle. Now, keep in mind, this is where we could be saved for bulls. If this candle were to push all the way back up and engulf in a green candle, or break these highs and close at 280.95 to 281 area, then typically speaking, it never traded below this area. It went down and then completely engulfed it, so it stayed technically speaking in this area. So then what I would look out for is a good deal area to buy and try to push up and retest, and I would sell at the retest just for the safety. Basically, you could draw a line and you could see where it would retest if it did, most likely that 282 area. Let's see. We can also go look at the SPX. This kind of gives us a better example of what's going on here. So let's see. Sorry, just trying to read something. Okay, so what I'm thinking is happening here is number one, it did try to retest. It didn't successfully break highs. Now it did peak its previous highs, but that doesn't give us all the confirmation in the world. What it does do though is it gives us hope for it to go back up. It rejected off that resistance, but although it did make 100% recovery, so we know that the bottom could be near. Now that candle did close pretty aggressively. It closed really low. Now technically speaking, we do have a support along this area, so it can start having the support here and then pushing back up. We'll have to watch and see if it starts breaking highs. I already have some alerts set. If the alerts break above that 28 or well, I feel like I'm on SPY right now. 283.92. I think that would be on SPY 283.92. Along this area right here, then we would probably see further upside. And that would be good, really good. Let's see. I'm gonna go take a look at the VIX, which is the inverse volatility index of SPY. Okay, so as you guys can see, the overall trend on VIX is obviously downtrend. Now, this can start trying to peak back up. This can take a massive rip up. Don't look at it too closely. Like don't let it distract you, because a lot of times we'll over examine a stock. We'll over break. How would you say this? We'll do too much analysis. We'll do too much technical analysis to the point where we have all these drawings, and then we're like, okay, it's gonna rip. But look at it from the bear perspective and look at it from the bull's perspective. Or if you were a bear and if you were a bull, that would really set it in place. So, technically speaking, let's see. Let's try to look at it from the people that that are thinking the market crash is going to happen. Let's look at it from their perspective. So, it did make a higher low. It validated a bounce. It is trying to push up, and it can push up. Whether or not it breaks highs, that would be where I get concerned. Now I will set my alerts. There is a huge resistance once, twice, three times, and it broke. So we'll see if this retest breaks above this resistance. I'll set my alert. If it breaks above that resistance, I would be a little worried about the market falling a little more than it should. Not saying it would make us go in a crash, but saying that we would probably get a pretty good deal on SPY if it were to fall. Um, and but one thing I have known is you can't really trust an uptrend and a bear stock, right? So, for example, if SPY's overall trend is an uptrend, if we are in an overall bullish trend, then you can't use bear plays in a bull trend. But vice versa, you can't use bull plays in a bear trend. So when this is overall bearish, you can't really use that higher low pattern very, very solely. You can't like solely rely on that. Um, you got to more or less just watch because it's made higher lows before and completely like you know it didn't really look at this. So it made a higher low here and pushed up and made a higher high, but yet it broke back low and made lower lows. It didn't really make sense. And the only reason it did that, and people would have freaked out, the only reason it did that though is because, well, number one, it's not higher than its previous highs on the overall chart, but again, it's also overall bearish. So um, you could have called out this consolidating point here, how it started consolidating, pushing, and then it broke highs. That was immediately, it broke this high and then it pushed down for a good deal and then ripped because everyone saw that consolidation area. They saw this kind of curve. Um, Now it's making this kind of cup and then handle. Um, we'll see how it plays out from there, though. I'm going to go to SQQQ, the inverse of SPY also. Okay, so we got this heavy resistance at 41.94. I have an alert set you see here at around the 42.10 area. That way it can tell me, okay, yeah, we just broke highs. Now it did break its previous highs here, made a higher low, so it is successfully trending up. Now what I want to see is, I mean, obviously I want SPY to go up, but I'm not going to let that blind me because either way I want to place some trades. So basically what I'm looking out for is I want to see if this can actually trend up. And overall chart is down. So I know overall it's probably going to at least end up touching back at the 33.20 area. For example, SPY is probably going to end up touching that 293 area again before it does fall or before it does continue going up. Like I said, downtrend, consolidation trend, and then uptrend, or downtrend, consolidation, downtrend. Like it doesn't just go downtrend. It doesn't just go uptrend or downtrend, uptrend, or uptrend, downtrend. It goes uptrend, consolidation sideways, and then it picks another direction, uptrend or downtrend. That's how it goes, right? So we're in an uptrend now and kind of consolidating. We want to see if it picks another uptrend and breaks highs or if it starts to go back down. If it starts to go back down and it breaks below this area, then we would be pretty set on SPY. That means on SPY, it would break this 289 area right here. It'd break this 289 area if SQQQQ, we'll just call it SQs. If SQs were to break that low, let's see. We have two watchers, just making sure. What is going on, Shirley? Let's see here. Okay, globe entry at 93.61 with a stop loss of 348 with a price target of 103.58 with a 2.86 to 1 ratio. Very precise on that stuff. Okay, let's see. Not a bad thing. Globe. Alright, so globe is in a consistent uptrend on the overall chart. Now it is overextended big time with a huge volume spike, so be very careful with that because big runners can be bigger fallers, and you got to be very careful. I'm not saying this is going to fall. The trend right now is up, so therefore what we look out for is when it rips and it's been breaking its highs, which it just did, you'll want to wait for it to consolidate, and this usually takes time. The good thing, though, about this kind of pattern is that you see how typically it goes into this sideways trend before it rips back out. The sideways trend right here before it rips right back out. You determine, your highs and your lows, right? So then what I would do, since this overall period is about, see, let's see, 62 days, we're looking at around a month or 2.5 months, basically. Let's just put it that way. We're looking at about a 2.5 month period of consolidation of up and down, higher or like support resistance, support resistance. And you can identify those on the overall chart to kind of get a better pattern. So I'd say this one, let's see, you said 103.58. 103, just do 103.50. So this is where you plan on it. Plan on it. Wait, let me. Is there like a previous? Okay. Now, keep in mind, this trend is a little too much up. In order for me to invest, like basically what I'm saying is, I would take a position if it fell to 85.50 and let it retest that area and sell there. I mean, it'd probably break higher, but I'd sell there for the safety. Keep in mind, I have seen this happen multiple times. In fact, I have been in stocks like this multiple times that completely will crash your account. Um, these they call hockey sticks. Goes down and then just spikes right up. Or AKA bubbles. They can call them bubble. A lot of you'll hear it a lot. People call them bubbles. Um, and one reason is because fast runners are fast fallers. Fast runners are fast fallers. So one that pushes very fast up will push very fast down. So you want to be very cautious. Not saying it's going to fall. I'm just saying you want to be very cautious. I personally wouldn't invest because I've had a lot of bad experience with them. Um, but you can identify your support and your resistance and kind of go sideways on the chart until it does decide to break up or break down. That's what I typically would do. But I see where your entry is though. Your entry would be breaking its highs. I typically don't enter when it breaks highs, which this stock is kind of different. I see that it's in the uptrend enough to where if it breaks highs, it's probably going to really shoot with that volume. But typically, I would wait when it breaks highs. I wait for it, wait for a good deal, and then I buy in when it has a good deal, and then it pushes up. APLS. APLS entry at $21.04 with a stop loss of $1.72 with a price target of $24.40 with a 1.95 to 1 ratio. Alright, let's see. I'm going to go on the 4 hours. Is this a new company? Oh, it's a pharmaceutical company. I don't really like investing in the pharmaceutical. But, you know what? I mean, I'm not saying I wouldn't. So, if it's good, it's good. Let's see. So we do have a resistance here. I would set your alerts for it to break above that 21 area, that $21 area. Now, typically when it gets, identify your high and lows. This is on a 3-year chart, and typically I wouldn't look this far back because things change over years. Some people don't have the habit they had 3 years ago, and same for companies. Some companies don't have the same cash flow as they did 3 years ago. It could be better or worse. You'd never know. So sometimes you can't really trade based upon the patterns 3 years ago. So I typically don't even look at that. I was just trying to get an example. Now this is what now the pattern I'm seeing here is a resistance and a support. So at this moment, it wouldn't be a good deal to me. I wouldn't invest into it until it came to this area. I would set my alerts if it ever ended up at the 1250 area or the 1504 area, then I would be looking for maybe a good potential buy or swing trade. Right now, I would short this thing, and that's my opinion. And the only reason is because it hasn't broke highs, and typically when it does get to this area, see it hits this area, it falls, hits this area, it falls, hits this area, it falls, hits this area. Most likely, it's going to fall. Now it did break its previous high here, so we're making this kind of W pattern, but it hasn't broke this one. It's an all-time high. But I don't know if you saw this pattern when you see an all-time low and then an all-time high on a chart. Typically, it likes to reset itself before it does break. So my desired entry would be around 1480 area. I would want to enter somewhere along this area. I'm not even kidding. I would typically short something like this just as a day trade. If we're talking swing trade, then I would just watch it and wait for it. And then if it came down to this area, I'd buy for a nice swing trade. Nice call though. I do like APLS. Let me go look at Microsoft in the meantime. Ooh, look at that. Microsoft is looking good. That is insane. Now again, there's that low and that high pattern on a chart. You don't want to trade solely on it, but typically it likes to fall about 50% of its high and then low. Um, but you can see this kind of consistent trend that is going here. It's an uptrend consistently. I don't like drawing very ascending patterns that often. I like to just stick with the flat support and flat resistance, just to keep it simple. But this one is, Microsoft is trending up. So technically speaking, this is the higher low. Now, keep in mind, it did bust highs over its previous pattern, but didn't break these highs. So I would definitely watch out for it. But it would be a typically good trade. Technically speaking, is this margin right here of loss worth it? Or is this margin, for this margin of profit? If it retested that 130 area and you got in at 126, is that a good margin of profit compared to that margin of loss that if it broke those lows? I would, in fact, people mistake this. See this engulfing or this huge red candle and then an engulfing bull candle? That's why I'm saying SPY could possibly do that. Now, technically speaking, it never traded below this support because it went down and closed, but then it went back up and then closed. So technically it was a bounce on that support. So technically that's a really good indication. Now it had another one right here and then an engulfing red candle. So technically the trading price remained right here. Now, if it breaks below 125.86, and I'll set my alert, then, we could see further downside to that. There we go. Set my alert. If it breaks below that, then I would see this thing come back down, at least to that 124 area, 123 area. And I would definitely look for a position. TRP entry at 50.01 with a stop loss of 186. What's the price target? 50.18. Alright, let's go look at it. TRP. Okay. TRP. Now it is hitting this very high. Typically, you don't want to buy at the high because, and I know it sounds good because it's busting highs. It's at an all-time high on the overall chart, but a lot of times no one wants to buy at an all-time high. Just really think about it. If you're at Walmart and there's Oreos or whatever you like, we're gonna use Oreos. If we're at Walmart and Oreos are at $4.50, the highest they have ever been, you probably wouldn't buy them. No one would buy them because $4.50 for Oreos is expensive. It's at an all-time high. That's expensive. Um, but if next week they were to drop to $3, then I bet their sales would increase more than their previous sales increased back in the past at $3 because people now have their attention on $4.50, and then the price falls to $3. People will snatch it up. So that's why they say breaking highs is a good thing for attention seekers, and that is good. You want investors to watch the stock. That gives it more volume, but basically what I'm saying is you got to wait for the good deal, and then all the buyers come in and play. So that when the Oreos are hitting $4.50 and then it pulls back for a good deal at $3, that's usually when all these people, all their attention. Could you imagine? Just imagine Oreos going on this crazy all-time high where they're selling them for $4. I guarantee you it spreads like crazy. Everybody talks about it. And then when it comes back down to $3 where it originally was, there's more investors, there's more buyers for Oreos because they're thinking to themselves, wow, it was $4 and now it's $3. I guess I might as well just buy a couple just in case they do go up in a higher price, and then I got them for a cheap price. That's exactly how it is in the stock market. When it breaks a high, it is a good thing, but you don't want to enter immediately when it breaks highs. You want to wait for the good deal, and then you can take a position for it to break highs again or retest those highs. That's what I typically look at. Shopify. Whew. And again, Shopify is very expensive right now. Although I used to trade Shopify, and then I got that V pattern there, the up for retest, fell down, and then pushed right back. It 100% fell, 100% recovery, and then waited for the good deal area, which is previous resist or previous support and resistance. It pulled back, and then people bought in for a good swing trade and rode this thing up. That's why my trading strategy is so effective. Um, is I love, like, that's such a perfect, like, it resisted, came down, pushed up, 100% fell, 100% recovery. See, 100% fall, that's about a 10% recovery. So 100% fall, 10% recovery. 100% fall, 100% recovery. So typically that's bottom. Wait for the good deal, and then it falls about 25%, and then pushes and breaks highs. Um, so typically, let's see, your entry was 288.17 with a stop loss of 13.57. 288.17. Okay, let me just go to the 15-minute chart. 288.17. I'm just gonna say, like, close to, yeah, there. 288.13. That's close enough. Okay. Sorry, I'm just trying to read the chat. Price target is 345. Holy crap. Oh, you're talking like a swing trade, really good swing trade. Okay. Oh, ah, good grief. What the freaking crap? $26 all the way up to $285, 86, technically speaking. Just be very careful. Now, in the past, after it has a really big rip, it typically likes to turn sideways. It makes this kind of like bull flag, up and then sideways, up and then next trend sideways. So typically, my very best entry, I think, would be around that 247 area. This is if you're wanting to swing trade. Um, and I'm not going to invest into this. It's way too much for me. Uh, Not in price, as in emotion. Like, that is, it's just, I'm scared of investing into things like this because um, I do this thing to where, like, I will put an overall position at a very high price, and I don't want to, lose all of that position. Um, I'll trade a high quantity. So it pushes up typically, and then comes down, and then pushes up and double tops. So if this comes down, you can push up or you can buy in for the retest, or you can wait for the retest and then get it to break lows. And when it does, on the littler term, then you can short it all the way down to that 245 area, and then you can buy back in for a call and just keep playing it that way. That, I think, in my opinion, that would be way safer. Again, we just gotta watch out for it. But typically, when it pushes up, it goes sideways, and pushes up, and it should go sideways. If based on technical patterns, it should go sideways. I'll set my alert here. Set my alert here at 278 and wait for the break below 278. If it never goes off, then I'll know to come back and kind of look at it and see what's going on. If it goes off, then I know it's probably going back to its pattern. V-ray entry at 903 with a stop loss of 51 cents with the price target of 1046 with 2.8 to 1 ratio. Alright, let's see. I've heard of V-ray. What is V-ray? I've heard of this company. So, I mean, we are technically in an uptrend. Still, again, it's kind of scary to invest in something like this, but we're going to look at it because, technically speaking, it is making higher lows. It once traded up here at $10. You said your price target was 1046. Ooh, so that would be breaking highs, technically speaking. I see where your eyeball is, though. Let's see. Okay. So basically what I'm doing right now is I'm identifying my low support, and my high resistance. I want to see where it typically likes to trade. It's approaching a very strong resistance. It could possibly touch that 913 area, but typically you want to wait for the good deal. And I'm sure you know this. So, and if you don't, then it would be good to listen. But if it does it has broke its highs. So technically speaking, it traded in this area, right? It came up and it could not break those highs and it resisted, fell and pushed up and 100% fall. All right, so see, here's how I judge where the bottom is. 100% fall, about a 50% recovery. That's something to kind of keep your eye out on. 100% fall, 50% recovery. That's something to kind of keep your eye on. It's like it's indicating that the downtrend isn't very strong. The bulls are almost equal with the bears, so technically it's sideways. 100% fall, and then 100% rise. So it fell 100% here, and then 100% rise. People found that attractive, and they were like, okay, obviously, bulls are not giving up, and there's becoming more bulls than bears. So then they invest, and it pushes up. It did break highs, so we will watch out for that. But remember the Oreo scenario I said. Um, I think that overall, you identify your support and resistance. So overall, 820 would be a nice desired entry in my opinion if I were to day trade, and then I would let it push back up to that 883, close to $9 retest area. Now that does not mean that it could fall or that it could keep pushing up. I would sell there just because that's where I would, my personal opinion, like where I would personally sell if I were to take a position. Only because that if it did keep going up, then whoopee. But if it went down, then I still sold for a profit, and it was a nice one. So that's why I stay so consistent on the stock market. Um, but let's see, AMZ, and I'm gonna look at that one, and I'll probably end the live stream. We've been going for, let's see, how long has the live stream been going? 36 minutes now. Let's see here. All right. So I'm looking at Amazon really quick, and I'm going to identify because Amazon likes to kind of point the direction for SPY also. Now, day by day, they're a little different, but overall, when one's up, the other's usually up too. Now, Amazon is kind of showing us this kind of valid W bounce, right? This kind of, all right, so basically that's what I'm saying. You see this area right here? You look at it as a mini W, so it fell 100%, recovered 100%. Wait for the good deal area, which is right here, about 50% of that 100% push, and then it pushed all the way back up and broke highs. If it didn't break highs there, then I would say, okay, it needs to look further down. Now, depending, if it breaks highs of that 1,849 area, I'm going to set my alert, then we can probably see some further upside to it, and I would, probably take a position and sell it at, strong support, strong resistance. Probably sell at that retest. And overall, if it did push here, I think that the overall trend is up. But I would still sell there as a day trader. But typically, Amazon likes to be very consistent with things. It kind of gets this bowl, right? So same for SPY. People are misusing this, and they're not seeing it. So this is kind of the same trend. The three top resistance on SPY, and then the big fall down and big push up. People see that on SPY, but if you really look closely, there's this bowl pattern, and then it's a cup and handle, cup, and then handle, and then a push up, right? That's exactly on SPY what you can see if you just really clearly look. I mean, it's kind of hard to see, but people are mislooking this pattern. You can see it here though. It's right here. It's a downward area, and then a push up. And now this big fall is our handle. It cracks me up when people don't want to look at this kind of stuff. It's people are like, the market's crashing, the market's crashing. No, this big fall right here, this is a good thing. This is a good thing for us bulls because you don't, like I said, a fast run up is a fast fall down, right? A nice, consistent, pullback. This is just our runner taking a break and getting a sip of water before he runs again. You don't want him to run without drinking some water. He's going to have a heart attack and it's going to plummet. So, yeah, basically, cup and handle there. Now, a good typical buy area, in my opinion, for SPY at this very moment, since the price it's at right now. I would say that I'm more or less looking at this 275 area. We'll be seeing probably soon. Um, so I do think the overall trend is up, but I think that the day trading trend so far, and my mic just fell, the overall downtrend, or the overall uptrend, and then the day trading day by day, it's going to be kind of going down the next, probably for the rest of the week to that 275 area. It might push up and hit, 281 and then push down to 276 and keep going sideways eventually. And then eventually, hopefully we see a consolidation area around this point, and then we'll see it break and then push up and then see 300s that we've never seen before. Um, so that would be amazing. I might be able to go to the 1 year chart to kind of see it better. And then I'll end the last three there. Thank you, Shirley, for all the call outs. They're actually really good. All right. All right. So it's not wanting to load. I have no idea why. Let's see what is going on. Okay. Well, that's weird. New subscriber. Thank you. I don't know how to pronounce that, but yeah, thank you. We have 101. Sweet. Look at that. Stock market 101. Isn't that ironic? That was a video uploaded yesterday. Um, okay, well, I guess that's it. I can't get it to load. I have no idea what's going on. 5 minutes. All right, yep. I'm gonna go ahead and end it before it ends up cutting out. Overall. But I'll keep you guys updated on my Instagram story. If you guys don't follow me on Instagram, definitely do. I usually post my positions if I take one, or even sometimes if I don't take one, I'll post like what I want to see happen or what I would expect to see happen. Um, that's not me saying that. Oh, here we go. Here it is. That cup handle, and then what happens after the handle? Usually it breaks highs and it starts trending back up. Technically speaking, after this huge push, right? Look, 100% fall. You got to look at the overall pattern. 100% fall, 100% recovery, waiting for the good deal area, and then huge push up. But yeah, that's basically it. Yeah, I hope you guys enjoyed. Then I'm going to probably go get me some gravy and biscuit, and then I'm going to head to bed. Have an early day tomorrow, like always, and I hope all of you guys enjoyed the stream. And I'll see you guys in tomorrow's video. Thank you guys so much for watching.